All right, let's jump right into the global markets this week because, wow, what a story. We saw this massive wave of optimism just send stocks soaring everywhere. But, and this is the interesting part, underneath all that excitement, there's this fascinating battle brewing between what investors hope is going to happen and what the economic data is actually telling us.
I mean, just look at this number. That's the Nikkei 225 in Japan, up over 3.5% for the week. That is a huge jump. And you know what? It wasn't just them. Markets from Wall Street to Europe, they were all marching to new highs. Investors were feeling incredibly bullish.
So what on earth is powerful enough to fuel that kind of rally all around the world all at the same time? It's not like there was some sudden economic boom. Nope. The answer is way simpler and, honestly, a lot more speculative than that. See, the entire market has grabbed onto one single powerful idea this week. It all comes down to a massive bet on what the U.S. Federal Reserve is going to do next. And there it is. This is the engine driving everything. The big bet is that the Fed is about to pivot, that they're going to start cutting interest rates as soon as next month. Investors are basically ignoring all the messy data and just banking on the idea that cheaper money is right around the corner. This, right here, is the hope part of our story. So let's start in the U.S., which is really the engine room for all this optimism. The big question is, does the economic data in America actually support this huge bet on a rate cut? Well, let's take a look.
At first glance, everything looks awesome. U.S. stocks had another great week. And what's really telling here is the leader, the Russell 2000. That's the index for small-cap stocks, and it jumped over 3%. That's a classic sign that investors are betting big on looser financial conditions, because that's what really helps smaller companies thrive.
Okay, but here's where the plot thickens. When we stop looking at the market and start looking at the actual economic numbers underneath, the story gets a whole lot messier. In fact, it's downright contradictory. And this slide just perfectly captures the conflict. On the one hand, people are still spending money. July retail sales came in strong, beat expectations, great news, right? But on the other hand, how we feel about the economy is getting worse. Consumer sentiment just hit a 3-month low. So we're spending, but we're worried. It's a total paradox. The inflation picture is just as confusing. You know, we got one number, the headline consumer price index, that looked a little cooler. That definitely supports the whole rate cut idea. But then producer prices, what businesses are paying, came in surprisingly hot. And core inflation, which is what the Fed really watches, is still stuck at 3.1%. So is inflation cooling or is it sticky? The data says, well, both. Okay, so let's hop across the Atlantic to Europe and see how this whole hope versus reality thing is playing out over there. They also had a fantastic week, but the reasons, well, they're a little fragile. I mean, this optimism was clearly infectious. Major European markets posted some really big gains. You see Italy up almost 2.5%, France over 2.3%. They were riding that same wave of hope for Fed rate cuts, plus a little bit of relief on the U.S.-China trade front. But, and this is the crucial point, this rally was not powered by good news coming out of Europe itself. It was basically riding on borrowed optimism from the U.S. Because when you actually look under the hood at Europe's own economic engine, it's starting to sputter. The reality on the ground in Europe is pretty tough. I mean, look at Germany, the continent's industrial powerhouse. Their production actually fell. Investor confidence is dropping. And across the whole Eurozone, growth is slowing down, sharply. That is a massive disconnect between the market highs and the economic reality. Now, things get really, really interesting when we turn to Asia. Because unlike the US and Europe, this is not one single story. What we're seeing is a powerful divergence. It's like a tale of two economic giants heading in completely different directions. And wow, this chart just shows that split perfectly. On one side, you have Japan's economy, which just surged, growing 1% in the second quarter. That's more than double what anyone expected. At the very same time, key data out of China, like fixed asset investment, really disappointed, signaling that there's still a lot of weakness there. And right here, you can see the fundamental difference in what's driving them. Japan's growth is coming from real activity, strong exports, businesses investing money. Meanwhile, China is grappling with a really serious problem,
factory-level deflation. That's been going on for almost 3 years, and it's a huge drag on their economy. So, yeah, Chinese markets did rally this week, but it's so important to understand why. It wasn't because their economy is suddenly turning a corner. It was basically just a sigh of relief over a temporary 90-day pause in tariff talks with the US. This is a geopolitical story, not a fundamental economic one. Japan's situation is the complete opposite. Their market rally is powered by genuinely good economic news. But that good news actually creates its own unique problem. It puts immense pressure on the Bank of Japan, which has kept its policies extremely loose for years, to maybe finally make a change. So you've got all these global threads, these mixed signals in the US, the fragile rallies in Europe, the great divergence in Asia, and they all lead to one single place. This coming week, all eyes are on one critical event. So here's a look at the week ahead. Yeah, we'll get some important data on housing and manufacturing, but really, all of that is just the opening act for the main event on Friday, Fed Chair Jerome Powell's speech at the Jackson Hole Economic Symposium. And I'm not exaggerating here. This one speech could finally settle that battle between hope and reality that we've been talking about. What Powell says, and maybe more importantly, how he says it, could set the tone for the markets for the entire rest of the year. Is he going to give a thumbs up to the market's hopes, or is he going to push back? And that leaves us right here. If Powell sounds dovish, if he signals that cuts are on the table, this market rally could get another powerful shot of adrenaline. But if he takes a hawkish tilt, reminding everyone that the inflation fight isn't over, well, as they say, buckle up. It's going to be a fascinating week.